delighted to have Yolande Piazza joining us today as our keynote speaker to discuss the future of financial services. Yolande is a distinguished leader with more than 3 decades of experience in technology and financial services. Prior to joining Google Cloud, Yolande spent 32 years at Citigroup, where she was most recently the CEO of Citi Fintech, responsible for identifying and driving new vectors of growth for the global consumer bank. She also led Citi's Consumer Innovation Labs and was CAO for Global Consumer Banking Operations and Technology, CIO of Student Loan Corporation, and Senior Vice President of Online Applications and Services for Diners Club International, which was under the Citigroup brand. Now at Google Cloud, Yolande will lead the company's North American financial services sales and customer engineering teams. She'll help define and create new financial services cloud solutions for the market and help Google Cloud's leading customers, including PayPal, USAA, Lloyds Banking Group, and others, accelerate their digital transformation journeys to the cloud. Welcome, Yolande. It's a pleasure to have you here.
Thank you, Ray. I am truly honored and privileged to be here, and especially talking about my favorite topic, which is the future of financial services.
Well, we're very excited to hear and looking forward to our conversation after what's going to be your presentation on the future of financial services.
Happy to jump in. So again, thank you everyone for having me today. I spent a lot of time really trying to understand, what is and be able to predict where we think the future of financial services really is. And when we take a look from a banking lens, it is very, very apparent to me we need to change and engage with our customers differently. I think that the traditional financial services have invested heavily in their digital, applications, but it's much more been geared around servicing than truly understanding the customer and meeting them on the journey. And when we've seen the rise of fintechs and neobanks, it's a very different model, really trying to understand how do we serve the customer differently. And so based on extensive studies and research that we were doing, which really started when I was running the Citi Fintech group, trying to understand what would get somebody to change their banking relationship. What is it that they want and what are we missing? And spending that time to listen, it wasn't something that was so far out of reach. It was simple things like understand the journey I'm on. Allow me to build for me personalized experiences that engage me in the way I run and live my life. Traditionally, banking platforms are, here are traditional products and you engage with us against those products, but that's not what the next generation is looking for. So know me, understand where I am, help me with goals, objectives, and spending habits. I think a lot of banks get confused between advice and education. Help educate me, simplify the terminology, break it down for me, present me with options, and help me go on that path to understand outcomes without saying, that's different to the investor, type advice. Assist me. Most people don't wake up and go, I can't wait to go to my branch today. But there are points and times of need where you want to be able to speak to a human. So we have to be way more flexible in how we allow our customers to engage through their channel of choice. That could be starting by sending a text message and eventually talking to a human, or something that you get from an email, to determine whether I need an answer now or whether an answer in an hour or two is absolutely fine. And just my experience coming to the hotel, I used the hotel app on my way in to say, hey, can I get an early check-in? And I didn't have to pick up the phone and call anybody to be able to go do that. And I wasn't sure I would trust the app to make sure that it really was secured. So just different things about how we engage with individuals. And if you think about the most valuable commodity on the planet today is time. And if you can think about how you are monetizing time to give people back, you change the interaction with me. So the other thing is trust me. A relationship that understands my spending patterns, that understands when in a month, things are tougher for me, and works with me creating transparency on impact. Warn me ahead of time if you see a risk, on my account, but do it under my terms and understand how I'm living my life and where those crunch moments are. And then lastly, incent me. How do we engage without a one-size-fits-all? Some people are incented in, more of a competitive and a community type environment. Some people are incented, purely by rewards versus cash back. Allow the customer to choose what's relevant to them and most important, I think is really key when you start to think about engagement. So you have to then say, okay, so what does that mean for the future of financial services? And I think for me, I firmly believe it's two paths. One of them is embedded finance. Every time you think about making a payment, to me, we've failed as an industry. It needs to be seamless. It needs to be streamlined. It needs to be completely integrated, especially across the places where, I operate and I live my life. But in addition, we need to be thinking about ecosystems. And one of my challenges has been, how are you truly thinking about that customer? How does health and wealth start to interact? How can you think about building communities? How do you think about teaching children responsible finance in a digital world as we start to move away from cash? Transfer of wealth, with the trillions of dollars projected to be a transfer of wealth, you see a lot of the traditional banks that the inheritors of that wealth are moving their companies to more of the Fintech type organizations because that's what they're comfortable with. They engage differently, they speak a language that's more relevant. So how do you start to think about building that entire network through, an ecosystem to really change your interaction? And one of my challenges is we spend a lot of time talking now about configurable platforms. Why aren't we allowing the consumer to build their own financial platform effectively for what's important to them and start to think about how does that change revenue streams? How do you think about servicing differently? Do you get into the subscription business? Things like that. So I think that there is a opportunity to step back, look more broadly, and actually drive new revenue streams to be able to support that. So if you think about it, and from our perspective, one of the first things I did when I got to Google was sit down and make sure everything that we were doing lined up to one of these four boxes. We are on a journey to help our customers drive growth. That may be through traditional revenue streams, but it also may be thinking about new revenue streams as you start to think about this broader ecosystem. How do we help engage differently? How do we then move into the cost bracket and take out costs? I think many people think of cloud as a technology enhancement. I don't. I think that's just one aspect. I look at the cloud and the services, and when you start to layer in data and AI and ML, you can start to lower the cost of how you run your business from front to back. And so we're really invested on how do we help take out the operating costs across many different disciplines to help free up some of that money to invest in that next generation, of banking. The third area is risk. I think traditionally, many companies, many financial services have looked at risk as people, process, technology. What happens if you turn that model around and think technology, process, people? There is no reason in today's world why we should be doing, subsections of checks. There is a way to be able to automate this across, almost every transaction to really understand your risk portfolio in a different manner. That needs engagement with regulators. It's not something that you do overnight, but I think if we started thinking about it differently, there is a huge opportunity to change the risk profiles of a lot of these organizations. And then lastly is efficiency. Open platform architecture, how do you increase the software delivery velocity? Just as an example, when we were in Fintech, we went from those large quarterly waterfall releases to deploying sometimes 30, 40 times a day. You need speed to be able to compete with the fintechs when you're the traditional bank, and you need to be able to empower that next generation of developers if you want to be able to attract the right talent. So I think there is a ton of opportunity to take a step back and really think about financial services from the lens of the customer, to create something that is really unique and actually is a mass enabler that will also drive revenues and take out cost. So that's my high-level synopsis of my views on the future of financial services.
Thank you, Yolanda. That was fantastic. I think as I listened to the presentation and and knowing your background, especially your work at Citi, I think one of the biggest challenges that I have seen is how do we help traditional bankers, particularly bankers that are operating in smaller type of markets, smaller type of institutions, how do we begin to help them begin to understand the disruptive environment that they're operating in, and how do they begin to reposition their mindset to confront all the challenges that they're facing?
I think it's a great question, Ray, and I think I'd answer that in a couple of different ways. First is, there's a mass difference between the rise of neobanks and traditional banks in the revenues and how you are measuring the economic models. So you've got traditional banks looking at in-year return. You've got them looking at the this month, this quarter, this year, where you've got a neobank that has a different set of challenges. How do I grow at scale? How do I get the customer base? And the returns are not the same. So for me, I think there's first a recognition that the customers are expecting something different. And it's not just digital servicing that's required. It's digital interaction, it's personalization, and it's going on that journey with your customer. But to do that, you have to create the space for looking at different returns. You have to start thinking about, I'm going to hold this innovation funds, and you have to really think about your delivery model so that you can test and learn at lower cost, much more rapidly, and start engaging, with your customer. I think, everybody now needs a strategy around digital currency. What does that mean? Because that will be the next big shift that we try to see. When we talk about embedded finance, everybody needs to really be able to think about embedded finance, and that's from the Internet of Things to completely streamline, processing. So it does require the ability to step back and look outside of the traditional P&L models, create the ability to invest, and do something which I think traditional banks have not been really comfortable with, which is test and learn. Some things will work and some things won't, but if you could do it rapidly and reduce the cost, you get a different outcome.
So I think the vision that you have presented in terms of the how and why to engage, engaging customers in a very hyper-segmented way, and to embedding solutions for customers, and really being much more technology enabled, requires a fundamental shift in mindset on behalf of the organization, and particularly its leaders. How does a small financial institution begin? Where do they begin when they're looking to start this journey to truly transforming themselves in the way that you have presented?
So there's a number of factors in there. It's not that we all wake up tomorrow and pick our top 10 customer things and we forge ahead. It starts at the bottom. You have to be able, especially in traditional organizations, you have to be able to look at that foundational layer and say, am I optimized to be able to even drive to a different outcome? And this is where I think that there's been a huge recognition around the interaction now between traditional, fintech, and big tech. And those companies that I see that are actually progressing, both from a strategy but also in execution, they've recognized that having those diverse perspectives actually massively enables. So it starts with bringing those organizations together, and there's a place for all of them. And then you start to build the pyramids, and work up the stack. So you have to have the core foundational layer that will actually help you to unlock cost, opportunity to invest. It creates a much more agile model for you to be able to get into the test and learn. And then you start to think about, what are the fintechs that can come in to help me be able to accelerate at speed? I think a lot of traditional financial services organization have all focused on, we have to build it ourselves. And I see that changing, and I see that shifting, because fundamentally there's very little IP left in what banks do today. It is a commodity set of services. You can play with rates, you can play with different, things to engage. But if you really want to start to diversify and, build that relationship with your customer, you have to start thinking about, what are those incremental opportunities to engage. So, we're doing with a number of customers design thinking sessions around innovation. And, are you a customer that's at 2x or 10x, in your thinking, and how collectively, again, with that model of 3, can we really start to move the needle as far as customer expectations and actually change some of your projections?
You were at Citi, and you have vast experience in traditional financial services. And now that you're at Google, you have a position where you can look at the problem from a new perspective. Looking back at your experience at Citi, what do you think the financial services industry, particularly traditional bankers, need to understand about the disruptive state of the industry that would be valuable for them moving forward?
It's a great question, Ray. I talk to a number, obviously in my role now, a number of different financial services. And what's always interesting to me is people will start with they're on a transformation journey. And I maybe have a slightly different perspective of transformation. And my response is generally, are you thinking about cannibalization? Are you thinking about new revenue streams? Are you thinking about disruption in existing P&L models? Are you thinking about what talent strategy you need to enable that? And if you're not, you're probably not really transforming. You're probably somewhere between optimization and re-engineering. So I think the industry, the traditional industry, talks very much about transformation, but they're not talking about diversification of, the traditional financial P&L models that have been in place for, over 100 years. So, I think that's the first recognition that people should be asking themselves in the boardroom. Are they really transforming, or are they really optimizing? Secondarily, we've seen a huge shift around thinking about innovation. Traditionally, I think it was very much around people thought of everything as their own IP. They have to build it together. But on a digital journey that has really been centered around servicing, self-serve, more than anything else, it's not IP. So we've seen this shift in people starting to think about the interaction between traditional, big tech, and fintech. And lots more conversations around how do we bring in challengers to help us rethink our truly disruptive innovation model and where we can go. But it all starts with you have to be thinking about every aspect of the journey. Quite often we start with art of the possible conversations, but you quickly realize you have to get back to ensure that you've created a foundational layer that is going to support this journey. And this shift to thinking about, we are technology companies that are enabling customers on their financial journey is really starting to resonate and become much more prevalent in my mind. So starting to think about, how does fintech enable, how do you start to rethink your business model, how does big tech enable all of that, is part of really trying to understand the disruption. And we've seen a lot of movement in the discussion, but I think it's early stages for that, surely that shift right now.
As you know, in Latin America, the region faces some really steep challenges with respect to the underbanked and unbanked populations, which in the aggregate runs around 50% of the entire region. and the traditional banking structures are obviously very expensive on a transaction basis. It just makes it prohibitive for individuals at the bottom of the pyramids to be able to leverage those services. How can technology, you had mentioned sort of relooking at the transformation from people, processes, and technologies to technologies, processes, and people. Is this something that is realistic for banks to really find the efficiencies that will allow them to go all the way down to those bottoms of the pyramids? Or is this something that they ultimately will leave to the fintechs and the neobanks to take care of? How do you see the possibilities of banks realistically undertaking the kind of transformation that will bring the efficiencies that will be necessary for them to truly be competitive in the market moving forward?
It's an excellent question and a lot to unpack there, but I actually look at LATAM and I see mass opportunity. You've seen it happen, in other parts of the world, like India as an example. So if you just think about the statistic that more people own a mobile phone than they do a toothbrush. And then you start to apply that out to which have been traditionally cash countries like in India. The shift and the move to mobile banking has been massive. And the domination of QR codes as a payment vehicle has really changed the industry. And I think, as everyone knows, the difference in fraud and risk changes massively when you go to cash to digital. So I think this is a phenomenal opportunity because you get to leapfrog over all of the traditional rails that exist today and rethink the market, in its entirety. Just even taking payments, for me, I believe that every time I have to think about the payment, we failed as an organization. Think about Uber. You never get in the car for Uber and ever think about the payment transaction after you've established that the first time. Why isn't my shopping experience that way? Why isn't everything I do and I interact that requires money the opportunity to do the same thing? So I think for the traditional banks, and you're absolutely right, Ray, it is very heavy legacy. It is very, cost consuming, and the opportunity to redirect funds into changing all of that, it's a tough pill to swallow on the traditional P&L models. But I think, I've often had this question, you have to think about that now. If you're not willing to deconstruct and rebuild, and there's a couple of different ways of doing it. One is, do you start building your newer platforms for new customers and migrate over, or do you do the mass migration, pluses and minuses to both? But if you're not willing to adjust and move, then I fear that you're at risk of becoming the next Blockbuster clients. And now the projection of that, is it 5 years or is it 10 years? But the inevitable will happen because you're not meeting customer demand. You're not running at the optimized, costs. So therefore, what you can give back to your customer becomes minimized. And that's where you've seen such success, for example, like Nubank in LATAM. So, there is, I think the neobanks have done a phenomenal job and have had a mass advantage because they were able to build that infrastructure from scratch. But I don't think that we should write off the traditional banks. They have trust, they have the relationships, they have, all of the risk and the regulatory aspects already secured. It's now time to take that leap of faith and start thinking about how do you reinvest, how do you deconstruct and rebuild your infrastructure, your architecture, your talent, your operating models, right? How do you become truly agile organizations? How do you empower your risk organizations to say yes and not start with no? But it requires that level of thinking all the way through the company for, I think, the traditional contenders to really rise above and, and lead in this industry. So I think it would be super interesting to watch who is going to be able to leapfrog and actually change that trajectory to create the space for the ability to invest back in and truly differentiate for their customer.
You mentioned, Asia as an example of a region that has transformed in some of these larger countries. India, you mentioned. I was in a Money 2020 on a panel with the co-founder of Rappi, and he was mentioning in the panel that they had attempted to really move and cajole the Mexican market into a QR code, but they retreated because like they said, they couldn't do it themselves. What role does government have, and how do these financial institutions, in the framework of these regulatory environments and political and economic environments, if the government is not there yet, meaning if you start getting ahead in terms of what your plans and your transformation efforts are, what do you think, how should these companies begin to look at how they deal with that regulatory constraint as they try to help the organization and the industry move forward?
I think this is a mass opportunity, again, for big tech, fintech, and traditional to come together. We're out there serving the customer every day, and what is required, right? There's still a huge risk when you start to think about, how do regulators think about cloud? How do we start to, think about new products and services? Because, anytime you're making adjustments, you need regulatory approval, to be able to change the way you service your customer. So, I think we have to create the dialogue collectively. One of the things that we commit to at Google Cloud is we will sit down with you and the regulators as you go on this journey. We recognize that if you're willing to outsource these commodity type functions now, then we have to sit there with you. We have to meet those regulated requirements with you. So how do we go on that journey together to, convince the regulators that this is a safe and responsible thing to do, but also it actually enables the customer and provides more services and opportunities when you get this right. So, I think every region we work in, there is a different relationship with the regulators, but I wouldn't say that anywhere it is so advanced or as advanced as it needs to be. So, I look at, from a regulatory perspective, Google was the first to embed in truly a zero trust policy. And if you look at our trajectory and our history, we can stand by, the security of our environments. How do we really get people comfortable with that? How do we get people comfortable with making that migration for an industry of people that have been very well rewarded for building that protective layer, internally and, but all independently? Surely, even if you look across all of the major cloud providers, we're better if you can, narrow it down to a few players that is 100% of their focus, versus, requiring every single bank, small, medium, or large, to go think about those services themselves. So it's changing, it's shifting. I would say the relationships with regulators on this topic are massively improving, but still have work to do there, I think. But again, I think we have to stop doing it all independently and come together as an industry and those supporting that industry to be able to meet with, the regulators and get alignment and agreement. We are huge supporters of put together regulations and certifications and allow us to certify against it so that we are meeting, what you believe the needs of your organization is.
Well, I have to say, I think we've come a long way. I remember a conversation with a regulator in Latin America 4 years ago around the cloud, and their answer to me was, we have no problem with the cloud as long as the servers are in our country. And so I think they kind of missed the concept of it. Yeah. But I understood, and I think one of the biggest jobs that we have to do is to be, as evangelists of this transformation, is to be educators, and we have to bring them along, because otherwise we're going to have this resistance. So, we've mentioned the cloud, and we focused in on it as a huge enabler that can help on being a fundamental foundational piece that allows for transformation. And we just discussed some of the regulatory challenges that we face. There was the disclosed vulnerability that came out last month with a cloud service provider, shows that there are risks. How do we go about sort of explaining and educating this these regulators about the risks that are around some of this technology that we're promoting?
Yeah, I think you just nailed it. It's around education. It's about the look backs. It's about, statistically, how much more secure is it in these types of environments? And as I mentioned, our zero trust policy, the level of focus and intention on ensuring that we're protecting, the customers and the companies' data is our core set of services, in the cloud space. And then you start to layer, once you've nailed that foundational piece, then you can start layering on top of that with, industry-based services and how do you start to really diversify. So I think it's an education. It's about having those frank and open conversations. It's about sharing in detail how we're all thinking about, those cloud migrations and how do we secure and protect. And one of the things I've loved on this journey is you have financial services experts that really understand, because they've been doing this their entire career around what protecting a customer data looks with advanced technology. And when you put them together, you get something that is 10x. It's the 2 + 2 = 10 type equation. And, even for us at Google Cloud, we hired Phil Venables from the financial services market to run all of cloud security across all industries, because that level of expertise and understanding the regulator's perspective, the customer's perspective, and the bank's perspective all start to come together, so it makes it more secure for every industry, not just financial services.
So Yolande, everyone says that the most valuable asset in a bank's vault is its data. But like oil, it's only truly valuable if you can extract it and refine it. What should banking leaders focus on when it comes to their data, and how should they go about leveraging it? How do you explain and sell this in boardrooms where people might not be so well versed and technology driven to deal with these types of issues?
I think it's a phenomenal question. Monetization of data is, one of the new buzzwords you see across industry. But I think traditionally, and to be honest, it's been a problem of the last 10 years. Everyone's been trying to solve the data problem. But traditionally, it's been very inwardly focused. How do we store data? How do we protect data? How do we catalog data? How do we report data? Not how do we leverage, not how do we monetize, how do we truly utilize? And quite often we're having conversations with people and they're saying, wouldn't it be great if we could bring in Google's data and marry it with ours? And I kind of chuckled, to be honest, because you haven't figured out how to use your data. Let's crawl before we run here. And really start to think about how do you build those data stores differently? How do you think about AI and machine learning? How do you start to, deconstruct the traditional models? So if we go back to the beginning in the presentation, all of those services are predicated on personalization. How do you start thinking about, why can't customers go in and do their own demographic compares of people like me? How do you start to get more predictive in their experiences and where they're going to go? And you do that by understanding the data. And it plays across all of those dimensions: growth, cost, risk, and efficiency, if you can really start to think about your data from the customer lens. So I think it's a huge area of opportunity. I look at some companies that are trying to boil the ocean and think about it all holistically. And then there are some that are driving from, let's take a business case and let's go unpack the data to support the business case of a particular use case. And so I'm not sure which one's right or wrong. I worry about the boil the ocean approach. But at the same time, the other way, I think the risk of it takes too long. But it is fundamentally time to step back. If you believe in personalization, if you believe or really want to get your customer interacting with you that much more, you have to think about gamification. How do you bring that together to create a differentiated experience? 80+% of people only come to the app for a servicing need. That doesn't create a trusted relationship with them. But if you can deconstruct and if you think about personalization, if you think about gamification in the entire ecosystem that you're building, you will engage with your customer in a different way. And then you can go on a journey together. And I see the beginnings of those conversations really starting to happen, but not nearly enough. It's, most people are talking about generic anonymized data. Again, I think the banks have gone back to, we will tell you what your want and your need is. Well, no one wants to be told whether their cup of coffee every morning is a want or a need, right? That's very, very personal. Some people will give up food to make sure they have their coffee. But if you start to think about how you build that out and how I can go in and set, those compares and see how other people are performing, you start to change the interaction with your customer on a daily basis. So mass opportunity, I think everything that we're talking about is predicated on understanding the data from an external lens, not just an internal lens.
Well, Yolande, look, I wish we had more time, and I wish I could sit here all day and chat with you about all of this. I have a lot more questions, but I want to really thank you and how much I appreciate you joining us and providing your insights. And I hope we get an opportunity to see you again in the future.
I would love to, and I'd love to watch the progress across LATAM and see how you have the opportunity to leapfrog in the financial services space.
Wonderful. Well, good luck in the role. I'm sure you're going to do great, and talk to you soon.
Thank you, Ray. I appreciate it.